household makes $100,000 a year, how much house can you actually afford? Is it $350,000, $500,000, maybe $600,000? The answer might surprise you, because what a lender says you can afford and what you should actually spend are often two very different numbers. I've seen buyers get approved for far more than they were comfortable paying every month. They get excited, start shopping at their very top of their budget, and then after they move in, reality sets in. Now they're stressed every month. Every paycheck is already spoken for. They're putting off vacations, delaying retirement savings, and hoping nothing breaks because there's no room left in the budget. And that's exactly what I want to help you avoid. As both a realtor and loan officer, I look at this a little differently than most people. Yes, I'll help you figure out what you qualify for, but I also want to help you decide what payment actually makes sense for your life. Those are not always the same number. So I'm going to show you how lenders calculate what they'll approve you for, approximately how much house a $100,000 income can buy, and most importantly, how to decide what payment is actually comfortable so you do not end up house poor. If you're thinking about buying a home in the next 12 months, click the link below. Whether you're here in Colorado or somewhere else in the country, I can connect you with trusted lenders and real estate professionals in all 50 states. And we'll walk through your numbers together so you'll know exactly what you qualify for and, more importantly, what payment fits your lifestyle. Now let's answer the big question. If you make $100,000 a year, how much house can you really afford? The honest answer is it depends. And I know that's probably not the answer that you wanted, but let me explain why. A lender is not just looking at your income. They're also looking at your monthly debt. Do you have a car payment, student loans, credit cards, personal loans, child support? All of those things affect how much you qualify for. So for example, let's say that you make $100,000 a year and you have very little debt. Depending on the loan program, you might get approved for a monthly housing payment somewhere in the neighborhood of $3,800 to over $4,000 per month. In many parts of the country, that could translate to a purchase price of roughly $500,000 to $600,000, depending on your interest rates, property taxes, homeowners insurance, HOA fees, and how much money you're putting down. And here's where I want you to be careful. Just because you qualify for a $600,000 home does not mean you should buy a $600,000 home. That's where people get into trouble. I've seen buyers qualify for far more than they were actually comfortable spending every month. 6 months later, they're stressed. Every paycheck is spoken for. They stop taking vacations. They stop saving. An unexpected repair shows up and suddenly it's going on a credit card. And that's exactly what I want to help you avoid. Remember, lenders are measuring risk. They're asking, can this person make the payment? I'm asking a different question. Can you still enjoy your life after making that payment? Those are two completely different conversations. One thing that surprises a lot of buyers is what lenders do not include in their calculations. They do not factor in your grocery bill, your gas, utilities, streaming services, family vacations, kid sports, date nights, daycare or nanny services, building an emergency fund. Those are real life expenses, but they are not part of your debt to income ratio. That's why I tell my clients to build a budget around their lifestyle, not just around what a lender approves. Personally, I like to see buyers start somewhere around 1/3 of their gross monthly income for the total housing payment. It's not a hard rule, but it's a great place to start. Then adjust based on your goals. If your dream is to travel more, maybe you stay under that number. If you're planning to aggressively pay off debt, maybe you stay even lower. If owning your forever home is your top priority, maybe you're comfortable stretching a little higher. The point is, make that decision intentionally. Do not let a computer decide your monthly budget for the next 30 years. If you're wondering what your personal numbers look like, click the link below. Whether you're buying here in Colorado or somewhere else in the country, my team and I can help you understand exactly what you qualify for, explain your loan options, and more importantly, help you figure out what payment actually fits your lifestyle, not just what the bank is willing to lend. So now that we've talked about what a lender may approve you for, let's talk about what I think matters even more. What monthly payment lets you enjoy your life? Here's a simple exercise I recommend to almost every buyer. Let's say you're paying $2,000 a month in rent today, and the home you're considering would cost about $2,700 a month. Before you buy, try living on that payment. For the next 2 or 3 months, put the extra $700 into a separate savings account every month. Do not touch it. See how it feels. If your budget still feels comfortable, you're probably in a great position to buy. But if that extra payment means you're stressed, dipping into savings, or putting everyday expenses on a credit card, you've just learned something incredibly valuable before signing a 30-year mortgage. That's a much better lesson to learn before closing than after. Remember, your mortgage payment is not your only monthly expense. You also need to budget for things like property taxes, homeowners insurance, mortgage insurance, if your loan requires it, HOA dues, utilities, routine maintenance, and unexpected repairs. One thing I've learned after helping buyers for years is that your first home does not have to be your forever home. I think that's where a lot of people get stuck. They're waiting for the perfect house with every feature on their wish list. Instead, think of your first home as a stepping stone. As you make your payments, you build equity. Historically, home values have tended to appreciate over long periods, and every payment you make builds ownership. Then when the time is right, you can sell that home and use the equity that you've built towards your next one. And I've seen that strategy work for so many people. It personally worked for me. And that's how a lot of homeowners eventually move into the house they really wanted, not by buying it first, but by taking one smart step at a time. At the end of the day, do not buy a home because the bank says you can. Buy a home because it fits your budget, your goals, and the life you want to live. If you're thinking about buying in the next 12 months, I'd love to help. Click the link below and let's have a conversation. Whether you're buying here in Colorado or somewhere else in the country, I can connect you with experienced lenders and great real estate professionals in all 50 states. We will help you understand your loan options, what you qualify for, and just as importantly, what monthly payment actually makes sense for you. My goal is not simply to help you buy a house. It is to help you buy the right house, the one that helps you build wealth without sacrificing your financial peace of mind. If you found this video helpful, I'd really appreciate if you give it a thumbs up, subscribe to the channel. It helps more people find these videos, and every week I share practical advice to make buying a home a little less overwhelming. Thank you so much for watching, and I'll see you in the next video.
I can put you in a house on a hill, put you in a condo in the city, put you in a mansion, put you in a mansion in Miami, put you in a mansion in Beverly Hills, put you in a mansion. I can put you in a mansion.